First of all, dollar index daily time frame, and one thing you can see, since Trump has said that dollar will collapse, they will lose their reserve currency status. Since then, dollar is not going down, and that level 101 is your key horizontal support. You can see candle close below that level, but that was trap for seller. And if dollar goes up from that level, then that can be your ABC flat correction, but after that it will go down, because right now on current price everybody is selling dollar. Crowd is already bearish. Now they know what happened in 1971. They are already 50 years late, but now they are bearish on dollar. And hedge fund, big player, they are also selling dollar, because short term it can go up, but long term 6 months from now dollar will crash vertically, and nobody want to miss that opportunity. And nobody know counter trend correction how high it will go, but this thing is your top. So market maker may try to kill those sale entry before going down, because Fed has already predicted mild recession. That means he has given permission to everybody so that they can talk about recession. But hard landing, deep recession like 2009 is coming. And hard landing means market crash, especially your SP 500 and dollar up. And you have already seen one time that trade on Friday. And in this FOMC meeting, before that we have GDP and PCE number, but still there is a confusion that when was our last hike, because we need official confirmation. Then we will decide when will be our first cut. So everybody is waiting for official confirmation. But this FOMC meeting you will get crystal clear answer. After that your recession trade will start. And rate cut, I have already explained you in past, is sign of central bank panic. So pay close attention how price react to that level in upcoming time. And if you see weekly time frame, then price is showing big rejection on 50% retracement of this last bearish wave, and there are many reasons for that. Stagflation, because you know that is first round of rate hike, and if that low survive for second round, then next time interest rate will go 10%. So bulls are already holding their position, and in the news everybody know that dollar will collapse. So seller are also holding their position, because dollar will go below 88 level when we will reach towards QE monetary policy announcement. But to end that confusion, if you see the data from IMF, that is fourth quarter last year, this bigger area is your dollar, and you can see dollar is still more than 50% than your euro. So in news and everybody is saying that dollar has collapsed, but dollar is still working as a reserve currency. That thing is not going to change at least next 6 months, That will happen slowly, will take 5 year to 10 year, but right now dollar is still your reserve currency and you have to follow all those rules which we are following since 2009. You can see this is your Chinese currency, and compared to dollar, China is still not a big reserve currency. So if you are confused, then you are confused by the news. So back to dollar index weekly time frame. Hard landing, deep recession means strong dollar. But that will be your counter trend correction. After that, it will come down. Now Euro USD weekly time frame. It is going up almost vertically, and next is your 1186 resistance level. And if you see daily time frame, from this bottom it is constantly going up. If market crash start, dollar will go up, but gold will also go up, but that upside movement will be limited because of strong dollar. But euro will go down because before we replace dollar as reserve currency, first thing is your gold, then is your euro, then come third place your China. So that area will be your key support level, and your trend line retest can be your dynamic support. But main thing is when dollar collapse will start on QE monetary policy, which will come after emergency rate cut. These two things, gold and euro, will fly. But crowd is only trading gold, not the euro USD. And once crowd shift to euro USD, it will start crashing like gold. And USD JPY, since last video, it is still trading above the trend line. So above that trend line it is bullish short term, and from this top to bottom this can be your corrective wave W, then counter trend correction X, then it will make new lower low wave Y, and this can be your ABC zigzag correction. So that 50% retracement from top to bottom 139.580 is your key resistance level, and that trend line. If that trend line breaks, then you can sell. But one thing remember, now US will cut interest rate and Japan will hike interest rate. Because of that two opposite policy, it will go down. And GBPUSD daily time frame, you can see since December last year it is sideways, it is not going anywhere, and this currency pair is like alien. All the news come and go. Gold crash $150, goes up $200, but this pair is behaving like nothing happened since December last year. So if range breakout, it will give you one retest entry buy, and your target will be new higher high. USDCAD, it is testing that trend line. Below the trend line you can sell, above that trend line it is short term bullish, but after that it will go down. So this is your dollar trade. And USD CHF, after counter trend correction it is constantly going down. And if you see H4 time frame, then it is making lower low with lower high constantly below this white trend line. So this pair is super bearish. If trend line retest again, then you can sell. So according to IMF number, dollar is still reserve currency, and official rate pause announcement from Fed will be big monetary policy change. Then you will see big change in market direction.